Hello, everyone. Happy April 1st. Happy April Fool's Day. Can't stand April Fool's Day. But we're here. We're here. A nice little rally to finish off March and end out the quarter. So we'll see if that sustains. Good morning, John. What else do we have? We have good morning, Patrick. Good morning, Sterling. Thanks for putting in the news, Sterling. Good morning, Jacob. Good morning, David. Good morning, Royal Palms. Good morning, Harold. How is everyone doing this fine Tuesday morning to kick off April, start of the second quarter? Waiting for some more people to come in. So, by the way, I'm on Futures Edge today and it's live at 4 p.m. Eastern. Hello, Charles. So you might want to tune into that and see what I say. But the regulars here already know, but they don't know what Jim or Bob's going to say. You don't know what Jim or Bob's going to say. So we're waiting for more people coming. Let's just go over. We had Redbook was the only thing out this morning, dropped from prior, but still pretty decent reading right there. We have 15 minutes after the cash open, the S&P Global Manufacturing PMI information, then the ISM, the more important number, coming out 30 minutes after the cash open. And pay attention to the jolts, the openings and quits. The market is paying attention to those now. So do not ignore those because it can set the tone potentially for the rest of the day. Other than that, you get the Dallas Fed Services and Revenues Index. So, but not a lot going on today. Remember, things are backloaded this week, especially with non-farm payrolls on Friday. So far you have Tesla up a bit. Their mega caps are down. Nvidia is slightly up. Johnson & Johnson pretty down over 3%, but nothing massive this morning. Overall, it's sort of a negative day. Real estate slightly up, and everything else is down to start off April. In terms of the rate cuts, we still have the pause in May and then 3 cuts back to being priced in. 3 cuts back to being priced in. So a cut in June and a cut in July. Back-to-back cuts getting priced in. Fear and greed still in extreme fear even after yesterday's rally. And roughly 35 Schiller PE. Good morning, Martinez. And again, in terms of earnings, only thing I'm really paying attention to is Restoration Hardware after the close on Wednesday. That's it. So nothing today. All right, shifting because of the announcements that's going to happen with Futures Edge, shifting to non-back adjusted chart. So you'll see a slight difference, but we're going to stay on non-back adjusted moving forward. Makes it going to make it easier for some things. So far, with yesterday's price action in the S&P, we do have a potential double bottom setup. Now, long way off from triggering, but if this did trigger, we could easily return to the highs. It would also be out of the way of the 50 EMA, and it would be most likely out of the way of the weekly rotation zone. So that is the bigger picture setup. I'm going to also be paying attention to see if we close above yesterday's high, because that could be for a % beat by bounce. Other than that, on any rollover play, remember, we still have downward trajectory. We still have the big tariff announcement tomorrow, and we have not hit the final target on the double top, the big weekly double top. So on the non-back adjusted charts, it's 54.65. And then we have the next key area. Let me move this a little over there and anchor it correctly. Then we have minor area 54.27, then 53.81. Yeah, you looked at Newsmax. Good morning, Anissa. What else do we have? Let's just see. News on J&J. Thanks for putting that in there, Sterling. Bankruptcy court denies talc settlement plan. Oh, boy. Yeah, that's not good for J&J. All right, so we have a longer-term potential bullish setup. May never trigger, but that's one to watch for, because of way over the next few, next few days to couple weeks to see if that does trigger or not. Shorter term today, again, we have the end of quarter window dressing. Today, the key level I'm looking at, the very key level I'm looking at for anything bullish is sustained above 56.70. 56.70, and the breakdown area I'm looking at about 56.05. Those are the two key areas I'm looking at right now. We have a little confirmed but not triggered mini double top on the 1 hour. You can pay attention to that too. So that would require a close below 56.1925. And then it could be a retracement to some of the key areas from yesterday's end of month rally with a potential full target of 55.75. In terms of your NASDAQ, you also do have a little mini potential double top. This one has not been confirmed. The S&P one, by the way, is confirmed but not triggered. Not triggered. And by the way, if it rotates back up and retest this 56.60 area, these doubles are off the table because they're just little mini patterns. Okay, overall, the NASDAQ still has a potential double bottom also. Same thing out of the way of all the key moving averages if this were to trigger in the next bit, and potentially out of the way of the weekly rotation zone. So if this did trigger again, we could see indices return to near their all-time highs. But we're not there yet. We're not going to get ahead of ourselves. Other than that, little key thing, the next major cluster, if we break down through yesterday's lows at any time this week, 18,750, 18,760 is the key area. Shorter term, I mean, the bear setups, potential bear setups right there. If we do start trading, we can hold above 19,500. Then I'm looking for a potential return to about 19.7, and the key level would then be about 19.755, 56 area on a more sustained rally. The Dow, still, there's no potential double bottom here, and still we have not hit the first target on the double top. So still watching for rollover plays in this, and there is no major key area right there. On a minor front, you see yesterday we gapped open to the 62.5. We still have the close below 62.5, so I'm still watching for that on the bigger picture. In terms of that, if we do rally today and take out yesterday's high, it could be a % beat buy bounce setup also. You got a number of these potential. So I'm watching yesterday's high for key price action. If we take it out and then sustain a close above them for a lot of things, including the Russell. The Russell does have a little mini potential double bottom also for the bigger picture. So that's what I'm keeping an eye on also. This is not a double top because it's not reversing enough of a move, but if it did break below 2017, the very key area would be 2003. On any break above 2038, then we're into a clear path move with a target of a 2061. The VIX back to 22 after yesterday's reversal bar, still elevated, but if we start breaking below yesterday's low, then I'll watch for more sustained rally. If we stay elevated, I'll watch for more choppy to downside. DAX, on a non-back adjusted chart, we're still barely holding key support in the 50 EMA. So this is going to be key, especially if you're closing below 22,300. That's key. And it looks like we're shifting into bearish mode unless the DAX can regain. The DAX, in order for me to get back to bullish mode, has to get above 2314. So I'll really be looking at 23K. 23K to get into bullish mode again from my perspective. The notes, the setup, by the way, on the head and shoulders, the inverse head and shoulders is better on the yield. So let's just take a look at that. It's still this 415 area. 415 area could take us back to the lows from September. of last year. But again, not triggered yet. There's a lot of key support in here. So that is it there. Dollar index, we still have, after hitting the stop raise, we still have, again, no close below the 62.5. No close below there. So it's still in play. The double is still in play. Came right down that 62.5 level and then bounced off of it. And did not trade through the 75% harmonic. So it is still in play. Dollar looks like it's trying to carve out a stronger bottoming pattern in the short term. And we could easily return to the weekly rotation zone. That's where the double target is. Crude, we went through the final target on the double yesterday. And the next key, I was watching 72.10 as the key next little minor area. We got up to 71.99. Next major area is now 73 with the declining 200. On any pullback, very key support is 70. Very key support is 70 with the first cross the rotation zone. Gold. This is looking more, it's getting very overextended, very overbought. Cycles at the top on the daily and getting to the top on the weekly, and still a divergent setup. Again, there's no topping pattern yet, but very overextended. I'm paying very close attention to about 31.50. 31.50. Next minor target is 31.96, and if it just keeps going, 33.12, so roughly 3,300. The yen, still trying to, again, kiss the trend line goodbye, still trying to get a rally back up, but nothing yet. Nothing yet. Paying attention to yesterday's high, though, for a potential percent beat buy. Cycles are still heading down. Euro, we still have the first and second targets hit on the double top, trying to roll over again. The next target is roughly 107, 106.98. And then if it breaks below that, 106.50 area is very key. Very key. So still watching for this to continue to play out right there. The spiders does have potential double bottom just like the futures. So we'll be keeping an eye on that longer term. If we did break down at some point below yesterday's low, the next key target is 541.75 area. On any rally, which is the high here? There we go. On any rally, very key area. Besides, we're gapping down a bit today, so the first thing would be to the gap fill from yesterday, 559.39, and then the next key area is the 50% retracement harmonic, 561.65, 561.70 area. To the downside, gap down, but you got some pretty key support. Some pretty key support just lower, right around 556.50. The Qs do not have a potential double bottom. Why? Because we extended yesterday with the price action below 459.63, below the 25% harmonic. So the Qs do not have a potential double bottom, even though the futures still do. Okay, the next key area also for the Qs on a break lower, the next key area, if it breaks down through yesterday's low, is 452.79. The key on a rally, again, on a sustained rally besides the gap fill to yesterday, the major level would be 475.50. Good old Bitcoin, not much to talk about. Really, we still have the massive double still trying to play out. So there's nothing else to talk about there. And there's no key invalidation points being close to hit yet. So what else do we have? We had Tesla, little gap up today, but the only thing with Tesla, remember it played out its double. The only thing with that is if it can still watching for rollover plays in Tesla. I'll start to reevaluate if it can start holding its 200 again for a bigger bounce play, but we're not there yet. Remember, we'll get the quarterly delivery figures out sometime. I don't know when those are. I have to look up to see when they're going to be released. But keeping an eye on that. Other things of note, let me just jump over here real quick to this other chart thing because I got some things on here. NVIDIA yesterday finished with the gap down, finished the little mini double. So that is done for NVIDIA. We had some doubles play out yesterday. What else did I have? Hold on 1 second. 1 second. Just looking at. We had the Russell mini double play out, finished. In Tesla. Sorry, I was looking at my other chart. We had the Tesla double. Remember, we had a double top in here that was triggered last Friday, played out, and making a little mini double bottom pattern yesterday also. But that was already also played out. So Tesla double top is played out to the downside. The double bottom bounce play you see played out pretty much exactly to the final target. And now that trade's over, but a little gap up. So those are the things that played out yesterday. Can we look at PEP? Yeah, here's an example of a double that did not work. They do not all work. But here's an example of one on the daily that it never officially triggered on the weekly, but on the daily, it did trigger and then got invalidated and stopped out. That's one that did not work. So that's why nothing is guaranteed in trading. But overall, Pat is still trying to carve out a longer term bottoming pattern. Just be careful if it breaks below this 142 area, because we could easily still see some lower prices and you have a failed double higher. The only thing that now gets me interested in PEP is unless it makes a short-term bottom pattern in here, which we don't have yet. The only thing that gets me more sustained and looking back at PEP from the long side is if we can follow through and sustain above 162, 161, 162. So, thank you. Delivery dates for Tesla on Wednesday. Thank you, Charles. So that's where that sits. The new JP Morgan collar trade strikes short the 5840 call strike, long the 5310 put strike, short the 4800 put strike. So major magnet price in there is the 53s, 5300s. Based off of that, that's where. So constrained, let's just see, 4800, which that would be very interesting if it did break below there. But the major key area for the magnet price is still right down here. We have a very key level right around that 5330. So on any rollover plays, that's a very key magnet price. All right. The XLF. It's still potentially valid massive double top in here. Still potentially valid massive double top. That's the only thing. Just double check everything. Yep, still valid, but not confirmed or triggered yet. That's the only thing. If in the short term, the only thing that could make me bullish on this is a close back above 50.60. All right. I've got to run. I got to have a dog that is sick right now, so I have to deal with that. And the open. So I'm going to have to run for now. Hope everyone has some time to tune in to Futures Edge live stream. If you can't watch it live, then please watch the replay. And I shall talk to everyone tomorrow. Bye for now.